Hey guys, so in this video we'll be going over a full step-by-step beginner's guide on how you can start investing into index funds with Fidelity. I have been investing into Fidelity Index Funds for a very long time, so we'll go over what index funds are, what criteria to look for when buying them, walk you through step-by-step on how to open and set up your own Fidelity brokerage account, go over step-by-step on how you can actually buy index funds on Fidelity's platform, and lastly, go over the best Fidelity index funds that you can buy. I'll also go through a quick strategy that can help you become a millionaire just through index funds. Now, what is an index fund and why are they so important? In very simple terms, you can think of an index fund as a fund that tracks a certain market index. Some examples include the S&P 500, which is an index of the 500 most powerful companies in the US, the total stock market, which are all the stocks in the entire US stock market, and the NASDAQ index, which is another stock market index. When you invest into an index fund, you're basically investing into all the companies that are included in the index that you are tracking. So for example, if the S&P 500 index is up around 80% in the last 5 years, an index fund tracking the S&P 500 will also be up around 80%. Fidelity is one of the most popular investment firms to buy index funds, as they offer index funds with low expense ratios, high returns, and excellent reliability. Now, what are some advantages of buying index funds? The first advantage is lower costs. Index funds typically have a lot lower expense ratios because they're passively managed. This means that you pay a lot less fees just for owning the index fund. The second advantage is diversification. Index funds seek to track the performance of a specific index, offering broad market exposure. This can be great if you're an investor that's looking for a diversified investment that tracks overall market trends. The third advantage is transparency. Since index funds replicate a market index, holdings inside index funds are generally well known and consistent. The fourth advantage is historical performance. Historically, over the long term, passively managed index funds have outperformed actively managed funds, which is great. Now let's go over some criteria to look for when choosing index funds. The first criteria that you need to look for is expense ratios. An expense ratio basically is how much money is being taken out of your investments every year. It's basically an annual fee that you pay for owning the index fund. You want to make sure that you keep these expense ratios as low as possible, and a good rule of thumb is to keep expense ratios under 0.2%, as a small difference in expense ratios will add up to hundreds and thousands of dollars in the long term. Don't believe me? Check this out. This chart shows the impact of a 1.5% fee versus not having a fee on your investments on a $250,000 investment over 30 years. An annual fee of 1.5% over 30 years would decrease your investment value by almost $1 million compared to the same investment with no fees. Unbelievable. The second criteria to look for is transaction fees. These are fees that funds charge you to buy into the fund and sell out of the fund. Transaction fees depend on the fund that you're buying and the platform that you're buying them on. The good news here is that if you buy Fidelity Index Funds on Fidelity, you will not be charged any transaction fees. But if you were to buy Fidelity Index Funds on another brokerage such as Vanguard, you would be charged a crazy transaction fee of like $40. So transaction fees are not an issue as long as you buy index funds that are offered by the same brokerage. Criteria number 3 is automatic dividend investing. Let me explain. When you invest into the stock market, you receive something called dividends on a quarterly or monthly basis. Every time you receive a dividend, you do not want that money just sitting in your account. You want that money reinvested into buying stocks and making more money for you. That way you can make money on your money. Your dividend basically buys you more stocks, which gives you more dividends, which ultimately makes you more money. This is called compound interest, and this is the best thing to ever exist. This chart shows you the difference between reinvesting your dividends and not reinvesting your dividends. You can see the crazy difference in returns. So the moral of the story here is reinvest your dividends. Now let's go over how you can actually open and set up a Fidelity account step by step. You have a few choices when it comes to the types of accounts you can open. You can open an individual retirement account such as a Roth IRA, or you can just open a regular brokerage account. Most of you watching right now will qualify to open a Roth IRA, which is one of the best tax advantage investment accounts available right now. So me personally, I highly recommend that you open a Roth IRA first before opening a regular brokerage account. A Roth IRA is a tax advantage individual retirement investment account where you can contribute after tax dollars. The benefit of a Roth IRA is that your contributions and earnings can grow tax-free and be withdrawn tax-free after the age of 59.5. Simply put, you pay taxes on the money going into your Roth IRA, then all future withdrawals and growth are tax-free. This is one of the best tax advantage investment vehicles available, so I would highly recommend you take advantage of it. So now we're here on the Fidelity website, so let's go through step by step on how you can get started with opening an account. So looking at the page here, you can see that you have two options: I know what I want, or I need guidance. But today we're just going to open an account, so click that. And once you click that, you're going to be given choices on the types of accounts that you can open. So I mentioned the Roth IRA, a regular brokerage account, and etc. So today, let's open a regular brokerage account. You can choose if you're already a Fidelity customer or not. We're going to say no. Opening an account just takes a few minutes. you'll need to confirm your identity and employment information, create a username and password, and transfer money into your account. So click next. So once this page loads, let's just put in some test information just for the sake of this video. Date of birth. And you're going to click next and then fill out the rest of the information. So once you've made your account on Fidelity and you've transferred money from your bank account into your brokerage account, here's what you're going to do. You're going to come into the account page here and click on accounts and trade and click on trade, right? Once this page loads up, you're going to click on mutual funds and then select your account that you want to invest with. Once you selected your account, you're going to pretty much come down to symbol and put in the ticker symbol for the index fund that you want to buy. For today's example, we'll use FXAIX, which is the S&P 500 index fund from Fidelity. So type in FXAIX, and you'll see it'll pop up right here. Click on that. And pretty much it's going to show you the current price of the index fund per share. And you're going to click on action here. You're going to click on buy. Now, the good thing about index funds is that you can buy dollar amounts. So let's say you have less than $169 in your account. You could put in the dollar amount that you want to buy and you'll be able to buy a partial share. You're going to click preview order. So once you click preview order, this is going to pop up, which says your account, the ticker symbol, the description, the action, which is you're buying the index fund, the amount that you're buying for, and the trade type, which is cash. It's also going to show you your estimated order value, and you're going to click on either place order, edit your order, or cancel. If you click place order, it's going to pretty much put money into the index fund at the next available price at the end of the next trading day. Now that you know how to buy index funds on Fidelity, let's go over some of the best Fidelity index funds that I personally own myself. First off, we have Fidelity's S&P 500 index fund, otherwise known as FXAIX. So if you take a look at the fund here, the current price sits at $169 per share. Their overall rating is 5 stars, which is great. The average annual returns for 1 year is 26%. 3 years is 9%, 5 years is 15%, and 10 years is 12%. If you scroll down here, you can see the expense ratio is just 0.015%, which is super low. There's no minimum to invest. You can see the graph here pretty much for the past 10 years. And this graph shows FXAIX and the S&P 500 index. And you can see that they're pretty much exactly the same. The fact that there's 2 line graphs here and it only looks like there's one means that they're pretty much identical. If you scroll down more, you can see the top 10 holdings here. So Apple, Microsoft, Amazon, Nvidia, Google, Tesla, and more. If you scroll down here, you can see the fund overview of the top sector, which is IT or information technology. If we see the performance and risk, you can scroll down here, you can see the performance versus S&P 500. So like I mentioned before, they're very similar, almost identical. And there's almost no difference because the FXAIX basically tracks the S&P 500. If we go to composition, we can see pretty much all the major market sectors that the fund is in. So information technology, financials, healthcare, consumer discretionary, industrials, and more. You can also see that the portfolio weight is in the United States. And yeah, honestly, this is one of the best index funds that you can get started with through Fidelity. Next up, we have FSKAX, which is Fidelity's total stock market index. This index fund basically tracks the Dow Jones total stock market index and is a great option as well. You can see the current price for the fund is at $134 per share. The 1 year average return sits at 26%, 3 years at 8%, 5 years at 15%, and 10 years at 11%. You can see here that FSKAX tracks the Dow Jones US total stock market index, and they're pretty much identical. The expense ratio is also 0.015%, which is great. There's no minimum to invest. The top 10 holdings are very similar to the previous fund. Apple, Microsoft, Amazon, Nvidia, Google, Meta, and more. Let's go over to performance and risk. You can see that FSKAX and the Dow Jones Total Stock Market Index are almost pretty much identical. Let's go to composition. You can see the major market sectors is IT, financials, healthcare, consumer discretionary, industrials, and more. Next up, we have FNCMX, which is a Fidelity NASDAQ Composite Index Fund. This index fund basically aims to track the NASDAQ Composite Index, and the current share price is $195 per share. The average annual returns for 1 year is 45%. The 3 years is at 6%, 5 years at 18%, and 10 years at 14%. If you scroll down more, you can see the expense ratio, which is a little high at 0.3%, but it's still manageable. There's no minimum to invest, and you can see the index fund tracking the NASDAQ Composite Index, and they're pretty much identical as well. If you go down to the top 10 holdings, Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Meta, and more. Let's go over to performance and risk. You can see they're almost identical here as well. Composition, a lot in IT, consumer discretionary, communication services, healthcare, industrials, financials, and more. Now, is it true that you can become a millionaire just by investing into index funds? Absolutely. Even Warren Buffett, one of the world's best investors, explains that investing into index funds is one of the best ways to build wealth for the average investor. The strategy is very simple. Simply put, you're going to put money into an index fund that tracks the S&P 500 or the total stock market on a consistent basis for the next few decades. This is called dollar cost averaging. Let me give you an example. So let's say you want to invest $500 per month into an index fund such as FXAIX for the next 30 years with an annual return of around 10%. So $500 monthly, rate of return is going to be 10%, and years to grow, let's say 30. After 30 years of investing $500 a month, your investment will grow to $1.1 million. If you look at the pie chart down here, you can see your total contributions are only $180,000, but the total interest that you'll earn is over $950,000. That is crazy. Let's say you can invest even more. Let's say you can invest $1,000 per month. Your investment would grow to $2.2 million, with total contributions only being $360,000, but the total interest that you'll earn is over $1.9 million. So the moral of the story here is that investing consistently for a long period of time is really, really powerful due to compound interest. This is a great vehicle to help you become an actual millionaire. Fidelity is one of the best platforms to offer great index funds that you can hold in your portfolio to help you become a millionaire. It's super easy to get started, so I really hope that this tutorial was very helpful for you. My name is Paul, and I talk all things money, finance, and investing. So if you like this type of content, please smash that like button and subscribe for more future content just like this. Your life is a masterpiece, so let's unlock your full financial potential together. And with that, I will catch you in the next video. Take care.